So we've been surveying the China M&A activity in 2016. And when we looked at 2015, in fact, that was a very strong year. And there were a lot of commentators in the market expecting that that was a bit of a peak and it would come down off that high in 2015. But in fact, for 2016, we've seen continuing strong growth of China M&A. So we're up 21% in terms of the number of transactions and up 11% in transaction values to $770 billion worth of China M&A. And that is something like double the level that it was 2 years ago. It's something like 4 times the level it was 4 to 5 years ago. So we're really seeing this big step up to a new level of China M&A activity. For private equity, I think the biggest challenge that they face is the competition from what we call big asset management. So there is this almost a wall of investable capital that has become available from, for example, financial institutions such as insurance companies, banks, securities companies, from the direct investment arms of state-owned enterprises, from the direct investment arms of private enterprises, and also from government-sponsored funds. And the amount of money involved there is literally running into the trillions of renminbi, so it dwarfs the private equity funding. And when you look at the investment activity from financial buyers in China this year, which has grown very strongly, that is being driven, a big part of that is being driven by this big asset management category of investment. So for the private equities, I think the competition that's coming from this wall of money is something that's making the environment quite difficult for them. The deal numbers are increasing strongly. There is in particular a lot of interest now from private equities and financial buyers on outbound activity. As deals become harder to find in the China market, people are looking overseas, partly as a currency diversification play, but partly as an opportunity to find transactions. And they're looking for companies that are overseas that have a China angle to their strategy, where they can bring back some aspect of that business and put it to work in the China market. So these are some of the trends that we're seeing. We look ahead for a year, so we look ahead at 2017. As I say, we've seen this big step up. We saw a big step up in 2015, we've seen it step again in 2016. So we're not anticipating that this is a peak. We don't see it dropping back down to the 2014 level. We expect things to stay around about this level and then to grow further from there. But there are some negative factors in the market. In particular, there are some new regulations which will probably have a slowing effect on the outbound transactions in 2017. And we're also seeing, we have the People's Congress in November next year. We normally find that there is a slowing of transactional activity in the run-up to that as people wait to see what the changes are. So there are these slightly cooling impacts in the market. We don't expect it to have a big effect. So we're expecting the M&A activity overall to be broadly comparable, maybe down a little bit in 2017 compared to 2016, but then continuing to grow quite strongly from this new base in 2018 and onwards.